Hello everyone, welcome back to the channel. Today we are answering one big question. What is the Federal Reserve actually doing right now? And why does it matter so much for crypto and the market? Stick around, because understanding this can give you a huge edge as an investor. But before we start, here is today's investor quote of the day. Compound interest is the eighth wonder of the world. He who understands it, earns it. He who doesn't, tastes it. I love this quote because it reminds us that wealth in investing doesn't usually come from one big trade. It comes from consistency. Back in 2015, someone who bought Bitcoin every single month, no matter the price. At the time, people laughed at him because Bitcoin crashed from 1,000 down to 200. He just keeps staking, quietly and consistently. Meanwhile, another friend waited for the perfect time to buy. He was always sure Bitcoin will dip lower, so he held onto cash and missed out on a year of growth. Fast forward, today the consistent investor built serious wealth. The market timer, still waiting for the perfect dip that never really came. That's the lesson for us. Don't let fear or headlines push you around. Use events like September's CPI report, the Fed meeting, and job data as information, not as trigger for emotional trading. Consistency and patience will always beat panic and guessing. The Federal Reserve, usually just called the Fed, is the central bank of the United States. Its job is to manage inflation, employment, and keep the financial system stable. And the main tool they use is interest rates. When they raise rates, borrowing money becomes more expensive. When they cut rates, borrow getting cheaper. That decision ripple through everything: stocks, real estate, and yes, even Bitcoin. Recently, the Fed has been working a tightrope. Inflation comes down from its 2022 heights, but it's not fully back to their 2% target. At the same time, the US economy is slowing, job growth is weaker, consumer spending is cooling, and the markets are starting to price in rate cuts. In fact, future markets are betting the Fed will start lowering rates soon, possibly at the next meeting. Some analysts expect a small 0.25% cut, while big banks like JP Morgan are calling for multiple cuts by the end of the year. So, why should you care as a crypto investor? First, liquidity. Lower interest rates mean more money flowing into risk assets. That's bullish for Bitcoin and altcoin. Second, dollar weakness. Rate cuts usually weaken the US dollar, which often pushes crypto higher. Third, investor sentiment. The Fed's decision shaped the mood of the global market. If people feel confident, they move back into riskier bets like crypto. But remember, it cuts both ways. If inflation stays sticky, the Fed may hold rates higher for longer. That will keep pressure on risky assets including crypto. Here is what I'm watching. First, the next Fed meeting. What they do, and more importantly, what they say in the press conferences. Second, job data and inflation reports, because those are the numbers the Fed used to build policy. And of course, market expectation. Sometimes what the Fed says matters less than whether it surprised the market. So in short, the Fed is trying to balance inflation and growth, and their next move could set the tone of the entire crypto market this year. Rate cut could be rocket fuel for Bitcoin, but if they hold back, expect more chop and uncertainty. What do you guys think? Will the Fed cut it in September, or are they going to wait it out? Drop your thoughts in the comments. I would love to hear your take. And if you found this breakdown helpful, smash that like button. Subscribe if you have not already. And I will see you in the next one.